All.com.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back, everybody. I am glad to be back in the studio after a really long time doing this from home. And good to get out here and see everything that's changed since the last time I was here. But anyway, if you'd like to call in and ask a question today, you can call at 216-901-0945. 216-901-0945. It's unbelievable when I think back to how long I've been doing this. I was thinking about that last night when I was trying to write an outline for today's show. And it was 1996 when I first hooked up with the sales manager here. And I didn't get permission to use his name. I'm not sure if he wants me to do that. But yeah, what the heck? I've known him long enough. His name is Tim Vaughn. And we've known each other since that time period. And wow, talk about change. Anyway, speaking of change, things that are changing now that are going on in the economy that could potentially have an impact on investments. When you start messing around with the supply of money, that is that's going to have a direct impact one way or another. Sometimes they're subtle, sometimes it's not so subtle. But right now, it looks like they're going to try to keep going after these tariffs. And this is the one thing that it's kind of interesting. It's pretty evident that Donald Trump doesn't understand how tariffs work. He thinks that you're taxing the people that are selling the product. And I got news for you. They're not they're not paying that. They're not dropping their prices by the amount of the tariff. So what ends up happening is we pay the price increase. We're paying the extra taxes because they're just going to pass the taxes along to us, which could potentially have some pretty negative impacts. I'm amazed that the average, even the people that are writing a lot of this stuff, they're a lot better now than they used to be. I will give you that for sure. 20 years ago, a lot of this stuff, you had to pay a lot of money for the subscriptions to the really good newspapers that listen to what I said, newspapers. Now people are going online that they don't even exist anymore. But the newspapers are all online now, and a lot of pretty good writing there. I think a lot of the writing's done by AI. I'm sure it is, and I don't see quite as many articles that are explaining how things work. They just report on the things that are going on and leave it up to the individual to be able to try to decipher that. And so and you probably, a lot of people probably know this stuff already. I think it's working its way down to even high schools. And so when you have economics in high school, how much does a private high school cost these days? A lot of them are 4 or 5 times what private colleges were when 30, 40 years ago. So they've had an increase in prices. Like, I think the average I saw was somewhere around 8 or 9% a year, which is almost twice the inflation rate over that same time period. So education's gotten to be a lot more expensive. That's interesting. If you've got kids and you want to try to reduce your costs somewhat, I think I remember seeing some plans where you could pay in advance when your kids are in high school, and they would lock those prices in so that you wouldn't have to pay the increases. It's quite frankly, when if a kid was in 9th or 10th grade and it's going to be going to college, if you could lock the prices in now and pay it up front, I mean, that's an unbelievably huge savings. And I guess the critic in me comes and looks at that and goes, yeah, but they're probably going to raise prices somewhere else to make up for that. Anyway, I'll leave that alone. Secondary education, I think, is very, very important, especially skills in trades today. The trades are incredibly important, and they make a really good return. If you're a pipe fitter, if you're an electrician, heck, even a lot of people at carpenters, not quite as much, but you still got to have a lot of skill to be able to do a lot of that stuff. And if you like that kind of work, then I think there are a lot of jobs in those areas. I would still try to get secondary education or get a skilled trade where you can't just go to a 1 or 2 year school. It's typically 4 or 5 years minimally. Some of them are 8 to 10. That makes a lot of sense. The longer the education is, the higher the income has a tendency to be. So anyway, I don't know how I got on that subject when I was talking about tariffs. But tariffs are basically a tax on something that is coming into the country. And what it leads to is higher prices. So when they add the tax to the goods that are coming in, like I said, it's very rare that the country and the companies that are selling those products in the United States are going to pay the tax without increasing the price. They normally just add the tax right to the price. So you're not taxing China. You're taxing Americans for buying Chinese goods. That's what's happening. And that would not be that bad if we had more manufacturing in the United States. Now, you could say, all right, well, that's probably going to encourage a lot of manufacturing to move from overseas to the United States. And there's some truth to that, absolutely. Not as much as it's not going to move fast. And over time, though, you probably bring some manufacturing back to the United States, which is kind of interesting. And that's one of the things I find most interesting about economics. Economics is literally known as the dismal science. It's because there are so many things that can happen that you can't account for, and you won't know what to do about it until it happens. And so you'll never get somebody to guarantee anything in economic forecasts. And so, but anyway, so having said that, the forecasts are for higher prices. And that shouldn't be too much of a surprise, because that's actually the way it's been, since this country was founded, and long before that, I'm sure. Anyway, we did have GDP last quarter was up about 3%, which is not bad. During COVID, it turned negative because everything was shutting down. But even a 0.8% growth, that was the growth over the previous quarter. It's still growth, but it's growing at a slower pace than it had before, the quarter before that. So again, it's not something that you can actually gain a good insight into where you should be investing or what the stock market's going to do. The correlation between the inflation rate and the stock market returns is not that good. And it's nowhere near as good as most people would think it would be. And it's been this way. I've been doing this now for almost my entire life. That's over 30 years. And the numbers are no better today. The projections are no better today than they were 30 years ago. And it always drove me crazy. Like, they have predicting the weather was more accurate than predicting the economy. And back in those days, they didn't have satellites, and they were wrong 70% of the time. I always wondered when I was a kid, why don't they just stick their head out the window and see what's happening? Hey, it's raining now. But anyway, there's a lot of stuff like that still goes on. I mean, there's some jobs. It's just it's hard to have a really large economy without having some waste in it. I mean, initially the something might work, but then the technology comes along and makes it not necessary anymore, but they have to keep those people on anyway. And so I get that, and I get people wanting to cut, government jobs. I don't think the way that Elon Musk went about it was the smartest way to do that. You just don't come in and there's nobody in the world that could make those decisions that quickly and make them good, make good decisions that fast when they're that big. And it was a slow process adding those people. It's probably, to get rid of the people, it's going to be a slow process because you're going to, need a lot of those people. They're there. They're without them, when the economy doesn't even function, or the banking systems, or they do function and they make a lot of mistakes. You ever have a mistake on one of your checking accounts and try to get that fixed? My gosh, I think I had 3 in the last year, and they're tired of seeing me and I'm like, well, just fix your software. It's supposed to work. But that's another thing today too. A lot of the software programs don't work like they're supposed to, and I don't know what it is with the companies. I guess they just this is how I feel their feelings are. Well, they'll figure it out. They'll actually work. I'll have to stay on the phone for 40 hours. That's okay. And I'll eventually, after I've talked to the 8th or 9th person and had to get pushed up and pushed back, it finally starts coming through. So don't feel bad. Don't think you're the only one out there that's doing that. And I think a lot of people just don't care. As long as it's not costing them a fortune, they would really not know anyway. But the bottom line is, I had to get that off my back. So thanks for listening to the rant. The one good thing about everything that's going on, though, is the demand and the growth in GDP, or basically the economy, has been much better over the past several years than a lot of the economists had thought. And you're always going to have that, by the way. You'll have a lot of economists that overestimate and then those that underestimate. But as a general rule, according to my Bloomberg, and so if their information is wrong, then I'm just repeating wrong information. But I doubt that it is. At least I hope not. But everything's been rising, not as fast sometimes as we would like it to, but it's not going backwards, And actually, the prices have risen a little bit faster than the median incomes have, which is can be disturbing if that goes on for a period of 10 years, 5 or 10 years. We're not there yet, but so if the average household income is not keeping up with price increases, groceries, cars, houses, that kind of stuff, then at some point in time that becomes a problem. And I would hate to be the people at the Bureau of Labor Statistics, the ones that have to collect all that information. That is a mind-bogglingly numbing job, and I just wouldn't want to have it. It's just talk about boring. And today you're probably going to have it minimally a master's degree, probably a PhD in economics to get a job like that. So that's another area that maybe next week I'll do a deeper dive and try to see where the jobs are being created. Healthcare is a big one. That's been a leader for now decades. And when you see why the average age of the population has been getting older and older, which is really kind of amazing. And when you get older, you end up having to go to the doctor more frequently. It's one of the reasons that the demand for healthcare is still there. That's why they've done so well. Anybody that's related or works in that industry has pretty good job security most of the time. I've only got about 50 seconds here before I have to take a real quick commercial break. If you'd like to call in, the number is 216-901-0945. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. I think we'll be back after these commercial messages, and give me a call.
Cleveland's got guts.
And the Indians.
As well as the Browns and Cavaliers.
And the Rock and Roll Hall of Fame.
And a downright awesome downtown with a Wallacadoodle-worthy waterfront.
But what's even in our water? Like a Lake Erie martini with more chlorine than a swimming pool?
Now, I'm a guy, and I've lived here all my life. Neither hard water nor chlorine bother me a bit.
Well, I had Wyatt Works put in a whole home water filtration system. It tastes better, and showering is so much better. My hair washes clean and stays healthier.
And I've got a regular old water heater.
And I've got tankless for endless hot water.
So what's our point?
Our point is, Wyatt Works is Cleveland's answer for water heaters.
Well, if you're a regular guy and just want same-day water heater service, Wyatt Works does that.
And if you want a water softener or a filtration system and want to go tankless, we do that too.
So get your water
Wallacadoodled
with Wyatt Works.
Consider it done at WyattWorks.com. License number 30185.
The Declaration of Independence begins when, in the course of human events, we aim for accurate presentation of all the facts. HumanEvents.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program. After 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit JoyceFactoryDirect.com.
I've been running in circles, jumping the hurdles, getting caught in that.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon, right here on WHK, 1420. If you'd like to call, the number is 216-901-0945. That's 216-901-0945. And I was just rambling on like I normally do. Yeah. I used to think it was because I was getting old, but I'm super old now. And just kidding. Yeah. Actually, I did just turn eligible for Social Security this year. So at age 62, but I'm not going to take it. I'm going to wait until I'm 70 and minimally 67. But so I think I'm going to try to hold out till I'm 70. You get more every year, but they don't guarantee that it's going to go up after the age of 70. And it might even stop before that. I haven't checked it in quite a while. But they're always making some sort of changes. And that's the thing that you can definitely count on in life is things are going to change. And sometimes they're going to change a lot. When they're talking about these tariffs, that would change a lot. And I just don't know if this administration realizes that when you put a tax on imports, the companies and the countries that are exporting those goods are not paying the taxes. We are. And that boggles my mind that concept is not understood. China's not going to pay the taxes. They're going to add the taxes to the cost of their goods. We're going to pay the taxes. So, and I guess, you know what? I mean, you could probably argue that, well, the rich people really don't pay their fair share of the taxes. And if you start taxing their food and you start taxing their cars and you start taxing their clothes, then you can get them to pay a little bit more in taxes. And I am not even sure if that's true. So, but I'm just saying, I've heard some people say, make that argument. I'm like, yeah, well, okay. But I can't imagine somebody, most wealthy people end up saving a lot of their money. That's how they got wealthy to begin with, in building businesses. And so it's really one of the hard parts about building is, okay, when you get to that point where you want to start spending down, now what? Because you're used to saving everything you get. And it's interesting. I can't tell you that there is one thing that should work for everybody, because there's not. They're all individuals. And everybody has different needs. Everybody has different wants. So that's one of the reasons that we still have jobs, and they haven't replaced all the financial advisors yet. They're trying to, with the AI stuff. And if you don't mind run-of-the-mill, advice, then yeah, you can do that. No problem. And actually, it's the vast majority of people that try to do it themselves end up not doing as well as a basic model or balance fund. But if you want to try to do a little bit better than that, that works where people like I come in. We try to help you get to the highest level you want to get to, but we have to take into account the amount of risk that you want to take. And they still haven't figured out that part. That they have models out there and say, well, here, this one does this and this. Okay, well, let's say you're 65 years old. You're going to retire in 2 years. You need to be able to take out 5% a year to reach your monthly income goals that you would feel comfortable with. Now, notice I said that you'd feel comfortable with. Okay? There are some vague rules regarding how much money you should take out. Most people have heard of the 4% rule. I think that in today's environment, that you could probably bump that up a little bit. And the 4% rule is just take 4% of your assets and increase it each year for inflation, and don't spend more than that. So between that and your Social Security and whatever you might get from, you might be still working. I'm going out with my boots on. How old is Warren Buffett? Yeah, I think he's 99. And Charlie Munger didn't pass away until he was 100. So he's in his 90s. I know Warren Buffett's in his 90s, but Charlie Munger was those guys, they didn't want to quit. Fortunately, because they owned the companies, they didn't have to. And so that was pretty good. It's one of the things that's kind of good about being self-employed. Your boss might really be a dork, but at least he can't fire you. And anyway, so next week I'm going to come in. I've got some models that I run through. I have a Bloomberg terminal. It's a very expensive piece of equipment, and it does a really good job. and we have portfolios through Goldman Sachs that we can run. And these are the ones I call pedal to the metal. Okay. And if I'm going to do the pedal to the metal, it's going to be with Goldman Sachs because their platform allows us to manage multiple accounts just like I'm managing one. So I take one account and I can assign it to as many people as I want. When I make a change to that model, it makes a change in everybody's account at the same time. And I really like that. And then there are one of the other things I really like, there are independent models out there who will take your portfolio and we give them direction. So when you come in, we try to figure out, what is it that you would be most comfortable doing? Because if it's not comfortable for you, investing's not comfortable to begin with. I mean, stocks fluctuate a lot. So you have to have some idea of how much fluctuation that you really think you could put up with. And this hasn't changed the entire time I've been in this business. There's going to be a lot of volatility. The average range of the average stock on the New York Stock Exchange is still around 50% a year. That's a lot. And I'm sure one of the reasons that over the years that a lot of people come in and decide not to open an account is because I'm telling them that. I'm telling you, hey, look, you step into the stock market, it's going to fluctuate a lot, not a little bit. And people hear that and they go, oh, that's not what this guy from so-and-so and so-and-so company said. Yeah, that's because he either doesn't know any better or he doesn't want you to know any better. And there are no other reasons. So he's either incompetent or he's not honest. And I'm saying he. There are a lot of females in the business now too. I should say they. But yeah, and a lot of stuff, like I said, it hasn't really changed a lot. What's really changed is how much. If I look at the economy in general, I think the area that's grown faster than most others, I know it has, is the production of electricity. When you think about that, man, you got 5-year-olds that have cell phones, and those have to be charged, and you've got all these electronic devices that take electricity. So I think that's one of the better industries you could probably invest in. And fortunately, if you're in a diversified ETF, it's got somewhere around 10% of the money inside of the utilities industry. So, and whether it's water and sewer, you're not going to go without that. And there's big demand because they're still putting up all these housing developments all over the place. It just blows my mind that we still have that kind of growth, and it's nice. I'm glad we have that. So it means there are going to be jobs for my grandkids whenever they get out of school. And they're all real small now, but one day they're going to be inheriting all this. And what do we want to leave to them? I hope that we're actually on a pretty good path, despite all the noise and the ruckus. That's the one thing I just can't understand. Why does Trump have to be so loud? Everything is a battle. Like, why? Is that really necessary? And it's not. A lot of it's not. So, but and here's the big thing. The Fed really controls the economy. If they wanted to slam the economy, and I don't care who would be holding the president's office, if the president of the Fed took the actions that he could take, in other words, let's raise interest rates, but let's raise interest rates by increasing the reserve requirements for banks. Okay? When that starts happening, now you're talking about 1970s, 1980s. If and when that starts happening, and they know what that would do, that's why they're not doing it. But you're talking about that big screeching sound you're hearing all across the entire country. That's the economy slowing down. And that is a really effective way of slowing down the economy, and they haven't used that in a big way in a very long time. If they ever do, you're going to want to buy 30-year bonds. Hopefully your bond fund managers, because I'm not a big fan of trying to manage your own bond funds anymore. It's a lot of work. I mean, a lot of work. And you're probably going to guess wrong. If you did want to do that, I would say you do a ladder. Like we've got a lot of CD and treasury ladders. So what's a ladder? You put 20% of the money in something that's going to mature in a year from now, 20% in 2 years, 3 years, 4 years, 5 years. Okay, and you just let it roll. Every year something's going to come up. It's going to come due. If interest rates are higher, then you're going to get a little bit more interest than you would have gotten if they'd stayed the same. If interest rates are lower, you're only going to get a little bit less. It's not going to move. Typically, it's not going to move very significantly, and it'll follow whatever's going on in the economy. And I think it's, other than that, there's you can try to find funds, and I do have a couple funds I really like because they do a good job. They've adjusted throughout the years. When I look at what they've done, I think they've done a marvelous job because I know what they were up against. Most people look at just the current yield and what the total average returns are over the past 5 years. That you can't do that. I mean, that's like driving to work using your rear view mirror to see where you've been. Okay, I'm going to look. And by the way, you could try that. Don't let me know if you're going to and where you're going to be so I can avoid you. But you look in the rear view mirror to figure out where you're going. Sooner or later, you're going to run into something. And I've used that analogy a gazillion times. You know why? Because it's still true. And doing investing that way is not a good idea. So how do you want to handle your fixed income? You can do a couple of things. There's some short-term bond funds, ETFs, that I really like. One of them's managed by the largest fixed income manager in the world. So you would think that if they're the largest, they've probably got a lot of contacts and a lot of information that we don't, which is true. And that's the easy way. And I've got a lot of that for the fixed income portion of my own portfolio and a lot of my clients. So the other thing you can do is you can buy short-term CDs. They sell CDs from banks all over the country at the firms that I use. Okay, so you can shop in CDs. They're buying and selling CDs just like they do other bonds. And most people are not super aware of that market. By the way, it doesn't pay a whole lot to an advisor. That's probably why the general public's not that aware of it. But it is what it is. And if it's necessary, that's what we're going to do. We'll take a look. I really like I am so glad that I put a lot of my money into some fixed annuities. When I'm full Social Security age, I'm just going to flip those suckers on. And between the interest on that and the Social Security, my expenses are covered and then some. So, and that's kind of, I don't have a lavish lifestyle, by the way. I mean, I'm the older I've gotten, the cheaper I've gotten. And I just, having said that, I'm not really that cheap. But I can afford the cheapness. So that's where you kind of want to be. If I made another $50,000 a year, is it going to matter to my lifestyle? Heck no. I'm not going to spend anymore. So, and that's something that's really hard to do when you're young, projecting out into the future what you think you might be spending as you get older. And that's a difficult task. Some people really get it, and I think they were born with the squirrel gene. They go and stack stuff up, hoarder. They really do a good job building that fund that they're going to use to live off of when they retire. And then others, not so much. Those are rough, when people come in and don't really know how much they need to be able to retire. And if you want to do that real quickly, just take whatever you're spending, whatever your income is now, and multiply it by 0.75. Okay, that's 75%. You could probably get by with 75% of your income because when you stop working, you're going to start collecting Social Security, and you won't have the expenses that you're using to go back and forth to work, whether it's uniforms or cars, whatever. Anyway, I've got about just a few seconds here before I have to take a real quick commercial break. So this is Bill Bullington. I'm here every Saturday morning from 11 to noon. If you'd like to call in when we come back from the commercial messages, it's 216-901-0945. And I will be back right after these messages.
I saw mercy. Mercy seated where the judge should be was guilty. Guilty and getting out of jail free.
All right, friends, Bob France here for the good folks at the Buff, Harry Buffalo, Great Northern Boulevard in North Olmsted. When's the last time you stopped in Harry Buffalo? If it's been a little while, you don't know what you have been missing. They have added so many phenomenal things, including the new lunch special. Monday through Friday, 11 a.m. to 2, you get your choice. 2 soups, salads, and sandwiches. You pick, all just $10. Now, that's the lunch special. They also have the happy hour specials, and that's my favorite. Weekdays from 4 to 7, a new food special every day of the week. Wing day, burger day, pizza day, all kinds of great options for you. You can check them out online at harrybuffalo.com. As a matter of fact, while you're there, join the herd, get a free appetizer on your next visit. Take a look at the menu, whet your appetite just a little bit, and head on out. By the way, if you're looking for something after work, great drink specials and happy hour too. $3 for craft pints, domestic talls, well drinks, and house wines. $3 domestic pints all day. So whether it's lunchtime or happy hour time or dinner time, doesn't matter. It's a great time when it's Harry Buffalo time on Great Northern Boulevard in North Olmsted.
Watch good, clean comedy videos from today's most popular comedians anytime you want at GodTube.com. Your place for family entertainment and laughs. It's the all-new GodTube.com.
Bob France here. Improve the comfort and value of your home with new windows from Empire Window Company. Call 855-76-EMPIRE or log on to EmpireWindowCompany.com.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon right here on WHK. If you'd like to reach out to me, if you've got questions regarding your own situation, feel free to give us a call. And 330-664-0700 is my office number. That's 330-664-0700. If you'd like to call in today, we've got about 15 minutes left here. It's 216-901-0945. Ask any question that you'd like to ask, and if I know the answer, I'll give it to you. If I don't, I'll look it up and call you later this week. Anyway, so everything right now, all the headlines are talking about the tariffs that are coming in, and what could that mean? Well, I'll go over it again real quickly. Higher prices for consumers, because the manufacturers are not going to lower their prices by the amount of the tariffs. And it's going to go on top of the prices that they need to get to cover their costs and to meet their profit margin targets. And anyway, so it's going to mean higher prices, which probably leads to slower consumption. Not always, but when the prices go up, some people have a tendency to pull back a little bit. Anyway, so GDP was up 3% in the latest quarter, which is still pretty good. The growth rate was still growing, but it was growing at a slower rate, so it wasn't negative. The cuts to Medicare and Medicaid, that could affect a lot of healthcare jobs. Healthcare industry has been one of the fastest growing industries in the country because every day 10,000 people are turning 60. That's pretty mind-boggling. And as you get older, you have a tendency to go to the doctor more frequently. I can attest to that. And so any cuts to Medicare and Medicaid could affect, that's going to have a shrinking effect on the economy overall. Nobody really knows exactly how much, and it could be something happens around the world somewhere and reduces prices for whatever reason and could offset that. So, and that's why again, economics is known as the dismal science. The minute you think you've got it figured out, something changes. And anyway, by the way, the U.S. economy has been slowing down over the past few quarters. It's not a negative yet, not yet anyway. But and I don't know that it'll actually even get to that point. If I were looking at all the experience over the past 40 years, I'd say the chances are not good that it goes negative. Might slow down to a very slow pace, and even if you did have a negative quarter, probably 1 or 2 quarters, and then start to pick back up again, because you still have a birth rate. You still have people coming into the country legally who are coming in, taking a lot of really good jobs, by the way. That's, ask Google how many people they recruit from China. It's pretty mind-boggling. And they come in, and now they're taxpayers, and especially if they're buying stuff with a 10% increase on tariffs. That is one way to get a lot of people to pay taxes. Is tax what they're buying, because there are an awful lot of people who underreport or don't report their income, and that is the problem that you'll always have. But it is one way. So anyway, by the way, they just passed this law. I don't think this is a good idea at all. They're allowing 401k plans to be invested in private equity. Trump's got a private equity firm, so of course, he's gonna. I don't know, man. I look at the guy's track record and how many of his commercial endeavors headed south, and I'm like, yeah, I don't think so. But it would open up a whole new market for him to market to, and it's okay. And I don't. By the way, I don't hate anybody. I've never felt really bad about any politician, because they've all got their benefits and then they've got their costs, and every single one of them. And you can't please everybody all the time. And I feel like you have the right to your opinion because you're an American, and that's one of the reasons we have elections. And I think it's overall it's done very well, and it's doing very well. So anyway, there's a new rule that came out that's going to allow 401k plans to invest in private equity and cryptocurrency, both of which will benefit Trump because he's got a private equity firm, and he also came out with a cryptocurrency. But and I don't pay a lot of attention to that stuff because it's too risky. If I wanted to do that, I know I would do better doing options on futures contracts. Okay, and that's the level of risk that you'd be taking to do that is about the same as a crypto or a private equity. You just have to remember, you're taking a lot more risk when a security is not listed on a public exchange and not under the scrutiny not only of your own CPAs, CPA firms, but you've got the exchanges themselves that are actually looking at the dollars and investigating. So it's not that they don't ever try to fudge the books a little bit, and I'm sure almost every publicly traded company's got one or two lines that could be changed or interpreted a different way. But the more scrutiny they have, the better I feel. So I don't like to invest in a lot of stuff that's not listed on a major exchange. If it's private, well, try to sell something like that. That's like, owning a house. You can sell a house. Actually, selling a house would be a lot easier than selling securities in a company that you own or one of your cousins owns, and or somebody that you knew at work owns. It's not that great of an idea. And what's a much better idea, I think, today, especially if you've got fixed income, you need to take a look at the fixed annuities. Some of the rates are significantly higher than treasuries or CDs. And and by the way, they're tax deferred. You don't actually have to start paying taxes on it until you start spending money. And if you set it up so that you can take a steady income for the remainder of your life, if the money was taxable in a taxable account, a pretty big portion of that is going to be considered a return of your original principal, so you won't get taxed on it. And so there are some benefits to taking the income to supplement whatever income you have during retirement. All in all, it's a pretty good picture for the right person. If you're in your 30s, probably not. If you're in your 40s, why am I saying probably not? Well, I think the stock market would give you better returns because you've got a long time period. And if you look at the long-term averages of the stock market, it's a lot higher than current fixed income rates are. And so if it all depends on your age. Also depends on your risk tolerance. If you can't stand to see your investments drop by 50% or more, don't put 100% of your money in stocks. Just don't. Not a good idea. And this makes my show sometimes really unpopular. You know why? Because I'm telling you the truth. I'm not the kind of guy who's going to tell you what you want to hear unless it's the truth. But I have a lot of people come in and leave my office because I told the truth, and they're like, "Oh, I didn't expect that." Well. And I'd rather live that way. I'd rather make less money myself and not have to worry about somebody coming in and saying, "Hey, you didn't warn me about that." Well, no, I do a really good job. I've got this huge screen in my office, and I've got the S&P, the stock market up there, Russell 1000 or Russell 2000. Those are small cap stocks. I'll show you. They fluctuate a lot. So if you're going to be upset by that, if you're going to be trying to watch it too closely, that's gonna be upsetting. The trick is to try to figure out where you are as an investor. What kind of fluctuation do you think you could stand? And once you got that down, then it's kind of easy, because there are lots of good products in stocks. There are lots of good products in bonds. There are lots of good products in short-term fixed income like money markets. There are tons. There's everything you need today at your fingertips. If you know what you need, you can find everything you want if you get down to, okay, this is what I want and what's going to be the best for me in those categories. I'll just give you a real quick example. And this is the first question I always ask people. Okay, here's your money. Okay, if your money's down 10%, are you upset? Most people say, well, yeah, I'm pretty upset, but are you going to panic? Are you going to upset to the point that you're going to be panicking? And, well, probably wouldn't panic. Okay. Because my number, by the way, is 35. If I'm down, I don't want to be down much more than 35%. I'm too old for that. So 35%, double the number, because if we had another one of those 2000 through 2003 or 2007 through 2009 where the market was down 50%, okay, if I got 70% of my money and I'm down 50%, that's 35%. Woohoo! That's my whole risk tolerance questionnaire. How much do you think you could see? How much of a decline do you think you could take? The only time it gets complicated is when somebody wants to take more risk than they can really afford to take. Because if you're getting close to retirement age, you typically don't want 80 or 90% or 100% of your money in stocks in case you do have that big decline, because you're still going to need to take out money from it. And when you're taking out money from something that's just been cut in half, okay, that could really be a problem later on. And so typically, most people are going to be somewhere in the 10 to 15% up to 30%. Those are wide ranges from 10 to 30%. But and occasionally I'll get somebody who just doesn't want to take any risk, which is going to be really tough, because to take no risk, you don't get a whole lot of reward when there's not much risk there. You'll get some, but it's just not going to be that much. And again, that's one of the reasons that the annuities are so can be so popular, because they're giving a much higher rate of return, and you have a chance to make more money from the investment side of the annuity. You have a chance. Okay, I'm not going to tell you that you'll pass the guaranteed. I don't think most of them won't. So the guarantees are really important that you know that and are okay with that. The guarantee is probably what you're going to end up with. And I knew that when I purchased mine. We've talked about this, for the last, 15 years on a radio show. And I'm always surprised, though, because there's always some knucklehead out there that's telling people exactly what they want to hear, which is, of course, typically not true. And makes it fairly difficult, but, I don't know. I feel like I need to sleep at night. So if you want to know how it is, call me. If you want somebody to tell you what you want to hear, call somebody else. Unless what you want to hear is the way it is, and then I'm a perfect fit. So I've only got a couple of seconds here. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. Feel free to give me a call during the week. 330-664-0700 is my phone number. Have a good week, everybody. Good luck and good investing.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.